What to trade? The market fell on heavy volume last week with increased volatility. Iron ore and lithium companies have been falling, so Gary Glover has surfaced some trading shares this week. Good morning, Gary. How are you?
Yeah, I'm excellent, Chris. How you going?
Well, we're in reporting season. There's lots to read, lots to digest, and a lot of movement. And as you noted in this week's report, a lot of volatility. So there's a bit to cover. You've surfaced some of the favourite trading shares of the last 9-12 months, which is iron ore and lithium as a group. But then you've highlighted some charts that we'll jump into a second. First off, can we just run through the indices? Because that's what we've been really following. That's where we start on the top down kind of things. You've got the NASDAQ 100 chart. It seems to be running out of steam into a confluence of these resistance levels. So what are these resistance levels and what's standing out to you this week?
Yeah, look, we just still got our sort of vertical trend there, got our sort of three, almost basically sort of four ascending trend lines there. So we're in that sort of vertical exhaustion phase there. So just noticed last week the S&P500 actually, it had a bit more volatility than it has had recently. Actually, I think that it actually broke down below the last 2 or 3 weeks sort of swing low. So that's sort of interesting there. When you're sort of in a pretty high momentum market, you don't normally get that volatility until really towards the end. So just think it's interesting here that we're starting to see a bit of vol here after this pretty tight sort of narrowing range here. So it should get a bit volatile as we get to the top here. So just a few sort of key fib levels sort of right here, a lot massive cluster of sort of big ranges there when I look at sort of some of the monthlies there. So just think we're sort of kind of on the doorstep here. So just still hanging on, still vertical here. Just think we're very sort of I think the high is sort of on the doorstep here. So look, they always these sort of kind of what do we call it? Sort of bubbles. They always can always push a bit longer than you think. And I remember sort of hearing a story about Kurt Nelson who shorted the 87 one. I think he tried to short it quite a few months before it popped. But eventually it did pop and then cleaned up there. But I think I think he was buying some sort of short dated puts for a few months beforehand before a few of them expired there and then had to keep going again. But again, eventually it sort of did crack and then it really cleaned up here. So that's the problem is here. You've got these vertical markets here. They're just not going to end well. So I know it's all beautiful that they're all hanging on, pushing higher at the moment. But and they can go a little bit higher here. That's the thing. These bubbles can extend a bit further. But yeah, just got to be on our toes here right now, just because we're sort of so looks very, very late stage here. We're starting to see a bit of vol there. So so just got to be super careful there.
You've mentioned some of the monthly cycles, so we'll get to that in another chart. But first, let's have a look at the S&P 500. So you've got the weekly chart here, which is showing sort of in the broader scale of things. We're going back to 2007. We had the GFC, and then that rally where we just trawled on out. Then you've got the COVID crisis that we've highlighted on the chart. This seems to be coming into kind of a bit of an apex that you've highlighted here. So with converging lines, there's only one way it can go, and the market's eventually going to be squeezed out of there, isn't it?
Yeah, that's right. So look, it can squeeze a little bit higher, obviously getting to the pointy end here. So oftentimes you sort of almost need to sort of see something a bit exhaustive. So just notice on that monthly ranges there, we've sort of seen some pretty good resolution in our fibs. So obviously that sort of 07, 09 range there, we saw resistance at the 161, sort of a bit of support at 200, the 261 a bit of and the 300 also some resistance as well. So there's definitely been some strong validity in that range. So that 4,500 could be a big level there to watch here. So we're I think we're at 20 points away. So just that's pretty close here. So just got to watch here. Obviously, very, very extended here, very late stage as we know, and vertical. So just time to be on your toes here.
Well, let's bring this one out and have a look, because you've got another chart here on the S&P 500, and this one you've got the numbers. So just quickly, can you run us through these numbers, what these periods or these red lines and numbers mean on the chart?
Yeah, so look, I guess being a bit of a student of history, having gone back and studied some of the great tops historically, there's just the one, apart from sort of the breadth and the heavy lifting done by the fewer, all that sort of classic signs there, and then complacency and all that sort of stuff there, is that I often find that the price levels can be important. Price levels like important extensions, or oftentimes the last leg can be like 50% of the range, things like that. But look, the one thing which sort of most people won't know, but there's actually this really important sort of timing cycles that sort of set up there, and oftentimes most I would probably say 80 to 90% of most of the big tops there end with a certain timing pattern there, and that's usually like a last sort of 3 months sort of push. So usually a last sort of pullback, and then acceleration into a high. They'll usually end with like a 3 month sort of move, so like a 90 calendar day. So you often sort of see tops sort of end that way, and they can be sort of it can be cycles within cycles there. So it might actually, oftentimes you might see a market sort of base for half a year, then rally for half a year, and then it does 2 blocks of say, 3 months into a high there. So they just tend to sort of, have some sort of end on a sort of nice rhythm sort of cycles there. So just notice a few cycles, but I was thinking maybe we might have got one into that sort of May there, but it didn't really. It's actually sort of sold off into that cycle, so it didn't really give us the right sort of resolution there. And then you're looking at other cycles here, and so if we sort of don't finish here, then we're probably looking a bit further down the track at the next possible cycle. But you just got a bit of strong timing here right now. That cycle tends to roll back sort of quite a bit, almost, or actually going back into the Feb high actually last year. So just a cycle to sort of keep an eye on here. Sometimes they can be a few days out. I know sort of 29 and 87 might have rolled a day short or rolled a couple of days extra. But yeah, these cycles sort of just definitely ever present in a lot of them. So that's one thing I'm just sort of mindful of there. Just a lot of highs sort of end with these cycles. So just something to sort of keep an eye on, as I say.
Well, that's something to definitely watch, and adds another metric to look at, whether it's confluence of resistance levels or timing. So another perspective, as well as the volume and breadth that you've mentioned before. When we come to the Aussie market, we're in the thick of reporting season. We're actually coming towards the end of it, and there's a couple of companies that we'll talk about in a second. But when you're looking at that indices and you see the heavy volume, the heavy week that we had last week, what's that saying to you, given the current chart of the Aussie?
Yeah, a couple of things interesting on there. Obviously, we've got that little tightening range, that's been running sort of for the last 6 to 9 months, and we've just overshot that there a couple of weeks ago. And oftentimes we sort of see that overshoot at the very end, and then we've had a bit of a bearish week last week. Just observation there was I saw a lot of you hear sort of buy the rumor, sell the fact here, but we saw a lot of selling coming into good results. So we'll sort of buy the news, sort of sell the good report, and so stocks have sort of run up obviously into these good reports, reported well, and then all of a sudden we saw some selling greeting that sort of good news. So definitely a few stocks that sort of come off quite a bit there into that good news. We also saw, the BHPs and Rios sort of iron ore price come off quite a bit. So I saw that sort of a lot of the commodity stocks really start to peel back. So we've sort of broken a few swing lows on the dailies and weeklies as well, which is a bit negative, a bit more volatility there. So that volatility should sort of pick up if you are sort of peaking there. So that, again, just a few signs there that to be careful there. I noticed that the lithium sector had a massive reversal. That's been one of the strongest sectors here. They had a massive bearish reversal there, almost very exhaustive, which we'll show a couple of those. But just interesting there that sort of some of the heavy hitters that have been driving the rallies there sort of have reversed in the last week or two, sort of in a bearish manner. So just again, first signs of weakness there for our index and for some of the big winners here. So just telling us just to be a bit cautious here.
Right. Well, watching the leaders, which is a Jesse Livermore and Billy O'Neill kind of thing, how they're indicating a barometer or a proxy for the market.
Yeah.
But in Australia, we can't go past the big Australian, which has announced that they will be coming back from the UK listing that they've had since 2001 with the Billiton merger. So is that kind of coming home, bringing it all home? Has that been sort of a negative news, or is it the iron ore prices, or what was it?
Yeah, so look, I think it's obviously we've got iron ore coming off. We've sort of got the petroleum sort of news there about rolling out some of the assets to Woodside there. But I think it's just a case of, this is pretty fully valued. They're starting to see some of the other stocks sort of cool off there. So you just got a mixture of all those sort of things there. So I think probably, maybe it comes back to the old high, has a bit of a bounce there. But that's pretty impulsive move, pretty strong volume as well. So, but yeah, I think there might be a bit, might come off here, might bounce here. The thing about resources I found in the past here, they tend to be, they do bounce back quite sharply. So they're not they don't sort of sell off and then just go into one-way traffic all the time. They can sort of get range bound and swing back and forth in the ranges there. So, but I do think that volume does tell us there to be pretty cautious here. I think this is just the first leg down. So I think it was UBS came out and said this. I think this is not a short-term move, but this is more long-term. Sort of coming off. It's funny actually. I was reading something in a trading book yesterday talking about sort of cyclical sectors, and oftentimes how cyclicals that have been sort of when they're sort of PEs are low, their earnings are good, and the dividends are high. That's often the top of the cycle in cyclicals. So, it was funny. I was just reading that literally in a book there last night. But okay. Whereas obviously, so if you think about other cyclicals can be sort of when they're suppressed and the and the PE is high and the cutting dividends, that's usually the low of the cycle as well. So so it's just interesting here. So look, I think BHP can bounce off that low there, but I think this is just the first leg down of a deeper move here. So if I saw it bounce back to $50 there, I think I'd be probably a seller for BHP.
Well, that's an interesting one to watch for BHP, the big Australian. Yeah. Now, looking at the other ones, the trading shares, we're coming into Cleanaway Waste, which you've highlighted here, bullish reversals. So what's that saying to you?
Yeah, look, obviously trending up here. We've sort of pulled back. I guess the thing I like about it so far is the pullbacks. The last three pullbacks have been pretty uniform. So basically what I mean by that is they're all sort of the same size. And there hasn't been a lot of volume in each of those pullbacks. They've been pretty impulsive move up, light volume pullback, impulsive move up, light volume pullback, impulsive move up, light volume. And then just the last couple of weeks, we've seen the volume pick up again, sort of near the lows there. So that's sort of, that's pretty bullish here at the last low here. So trend up here. I know it looks a little extended here, but sometimes you can get that, when they've been building like this, a couple of higher lows, and then see the volume come in at the low there. It's usually sort of can drive through there. So the sector's been pretty robust in Australia here. So expect them to report pretty well. Obviously, there'll be some concerns about outlook here, but I think this is it looks pretty positive.
Okay, so that's another one.
Just remember, you are pretty late stage here. So this sort of, to me, this type of sort of setup here indicates to me that there's another leg up here, but this is probably the last leg up. But the last leg can be pretty exciting as well. So
you have noted, that sometimes in that last leg you can get a massive push of the full gain in that final spurt.
Yeah.
So looking at those companies that sort of are a bit late stage, those ones that have run strong, we're talking about lithium companies here. You've noted a few of them before as trading shares. We're starting off with Orocobre, which is the big one. It's had some recent mergers, acquisitions.
Yeah.
Talk. So what's happened with the company and why are you highlighting this one now?
So we're just sort of showing, see how there's, we've got our three ascending trend lines there in a weekly there. So we've got our, that's a hallmark there of how this sort of base build, and then your stage two, and then your sort of vertical stage, and then obviously you go into your corrective process after that. So we saw volume down the low. It's obviously volume accumulating on the next pullback, and then we started to see obviously the acceleration there, sit on top, and then get vertical here. The last thing on the chart here, the last couple of weeks, we saw some massive volume the last 2 weeks. So massive spike into that volume. So probably one of the widest ranges of the whole move, which is often an indication of a top. And then we saw, again, a big wide range last week. Again, look at the volume, probably the biggest volume on the chart as well. So just seeing some classic distribution signs there, into a big vertical top move as well. So that's, to me, that's just sort of it's a sell signal for me every day of the week. So you don't see these sort of classic trends here and these big vertical moves here. And that's the type of thing we're looking for in the S&P and the NASDAQ, is to have that sort of, exhaustive move and then a big reversal on big volume. And that's the thing that if we see something like that, then that's when we know we've got to get out of Dodge. So but that looks pretty negative. And that really, we're looking for it to come back to where that third trend line started there, which is 550. So that should be the minimum move we want to see come back here. So I think just be careful if you're long these lithiums here. I think we've seen the top here and some of these plays here.
Well, that leads us into Pilbara Minerals PLS is another one that you've highlighted. So can you walk us through? There's a lot of similars. So you've got
similarities. Looks funny if you look through 90% of them. So look at Mineral Resources. Linus. You look at all the big ones there. They all look exactly the same. So they've all had these run ups here, all accelerated into these massive tops here, and they've all popped into a high, big wide ranges. The volume has reached fever pitch the last few weeks. Massive ranges. So oftentimes when you're sort of running up into a top, you normally sort of end, if the really strong moves will end on probably the top will be the widest range move. So if you sort of see a wide range, then okay, well, next week's got to be even wider, because otherwise that's sort of can indicate the top there. So sometimes they can, you see these wide ranges, think, oh, that might be as big as it gets, and then the next week it's even bigger, going straight up here, which is often the case here. But then was just seen here that's this classic, and we're sort of seeing this accumulation type volume at the low there. Obviously good volume on the depth, and then the volume starts to peter out, and then as you get near the end, signs of exhaustion, the volume picks up again in a big way. So we're seeing that massive volume spike into the high, massive volume on the reversal here, big wide range down. The classic sort of topping sort of signs there. So again, we've just got a massive sell there. So that's got a 140 sort of minimum target there, probably more likely to come back to 110 there, where that third trend line started. But yeah, again, it's big distribution sign there. So just telling me to be really cautious. So go and have a look at all those stocks in that sector. They all look the same. So telling us to be super careful there with that sector there.
So watch out on the lithiums. And another hot one that's been running strong for 2 years or 5 years, depending on how you're looking at it, is the buy now, pay later space. And if we look at the original one, and as you've consistently reminded us, what seems to be the only profitable one, we're happy to be comment below to let us know if you found another profitable buy now, pay later company.
Yes.
But, we've seen huge news from Afterpay and how that's pushed the Australian market, brought the spotlight to Australian tech, fintech. But we've got Humm Group that's kind of been lagging behind, except we've suddenly got a volume spike. So what's catching your eye here on Humm?
Yes, the main thing, obviously, like Humm has sort of consolidated all its brands. It is profitable. I think it's obviously kind of reported pretty well, and which is all pretty good. Technically, it was seen after that sort of 2020 low, we had a nice impulsive move, and since then we've just gone sideways. So we've had a pullback there, but just pulled back in a sideways manner. So this is a big sort of sideways corrective pattern. And again, it's a little bit of a VCP pattern, you might say. The correction's got, each one's got sort of smaller and tighter. And then we've sort of tightened up again here, made a sort of probably a first higher low. And we've seen a bit of volume come in last week there, which is pretty positive there. So look, I'm not a massive fan of the sector here, but this is the one that, if I had to own one of them here, this is probably the one here that make some money, probably pay some dividends, and actually making profit there. So, but yeah, this one looks pretty good here. So, I think if it actually breaks above that little swing high there recently around 114, that would be an extra piece of positive, evidence for me that it can actually sort of break out of this range here, but probably needs to break 114 to sort of continue on there. Just notice a few stocks that look like this, they can sort of falter, so just got to be cautious a little bit there. But yeah, the signs look okay there.
So when you're saying be cautious there, this is the kind of thing that you're running a tight stop on and keeping your clients up to date when this thing's moving.
We're so late stage here in this bull market here, and markets are so vertical here, and you're already seeing signs of selling from our market. So got to be, got to be managing risk here. It's almost imperative at the moment. So still shouldn't, just got to probably pick and choose your trades here and probably be even more selective. But we're still seeing some of the stocks in the growth sector sort of move pretty well. I think that we had a trade on that Thomas there last week, and it's already gone 25-30% above here in a couple of weeks. So some of those sectors are still sort of moving here. So and when you are at the late end of the stage, they can be, can get excitable at the end. So so you still got to manage your risk. I'd probably personally just trade a little bit smaller than you normally would if you're in the meaty part of the trend. But still taking trades here. I'm just probably being extra cautious, maybe trading a little smaller and keeping the stops a little tighter than normal.
Well, very good. Well, thank you very much for the update, Gary, and we look forward to the next one next week.
Okay, thanks, Chris.